Greetings from the Crypto Swiss channel. This is James. Being an XRP holder has never been more advantageous. Yes, you might argue that owning XRP in 2013, when it was worth less than half a penny, would have been better, but I'm not saying that. I'm referring to a setting in which it's obvious that XRP makes sense. You may now have a far greater degree of faith in XRP than you could have in 2013, since it has gained significant traction. Tired of fake gurus who claim to be expert traders but never trade live? I trade live on the second largest crypto exchange, where everything is transparent and results can't be faked. For over 440 days, I've consistently closed every month in profit. In the last 90 days alone, my followers have earned over $34,000 in profits with only 4% drawdown. Verified results, not empty claims. Want to see my verified stats? Click the first link in my profile and start copying my trades for free today. The risk-reward profile is entirely different from what it was in 2013. Therefore, I would contend that this is the greatest moment in history to own XRP if you take into account both the risk profile and the possible gain that lies ahead. Additionally, there is more evidence, which I will continue to highlight on my channel, including in this video, that clearly shows XRP's long-term viability, meaning that as the cryptocurrency market grows, more institutions and businesses will invest in it. As a result, a specific portion of the fresh capital will move into XRP. Here is the headline. Coinbase institutional files for XRP futures, trading with CFTC from Cointelegraph. People, this is something that is taking place as a result of the government transition. This is another thing that is occurring as a result of the administration transition. Take a look at this. Staff from the US SEC explains that certain stable cryptocurrency coins aren't securities. As we dig further, you'll notice that the SEC has abandoned its attempt to seize cryptocurrency. They are no longer attempting to control stable currency. It has been turned over by them. The government shift is to blame for that. The introduction of the Ripple stablecoin, RLUSD, which, incidentally, was at about 211 in market capitalization out of tens of thousands of coins when I checked yesterday, is fantastic for investors of XRP. Think about this coin, which has a market capitalization of 211 out of tens of thousands. 4 months ago, it was non-existent. I find the way it's jumped up to be pretty cool. Additionally, XRP is needed to power it on the XRP ledger. For XRP in particular, this is fantastic. Attorney John Deaton has also provided some commentary on this initial piece, which relates to the filing with the CFTC. Before continuing, though, I would like to clarify that I have no prior experience in finance. I'm not giving financial advice, and whatever I say or write should not lead you to buy or sell anything. I'm merely a hobbyist who likes to create YouTube videos about cryptocurrency-related subjects for enjoyment. Okay, this is how the piece reads. To introduce futures contracts for XRP, US cryptocurrency exchange Coinbase has submitted a filing to the US Commodity Futures Trading Commission. Coinbase Institutional said on April 3rd, "We are thrilled to announce that Coinbase Derivatives has filed with the CFTC to self-certify XRP futures, bringing a regulated, capital-efficient way to gain exposure to one of the most liquid digital assets." That is the case, in fact. On the whole darn planet, XRP is by far one of the most liquid digital assets. In any case, the company stated that it expects the deal to take effect on April 21st. The certification filing states that the XRP futures product will trade under the symbol XRL and be a monthly cash-settled and margined instrument. The contract is settled in US dollars and tracks the price of XRP. At $2 a token, 10,000 XRP, or roughly $20,000, are represented by each contract. Contracts can be exchanged for the current month and the next 2 months. If spot XRP prices fluctuate by more than 10% in a single hour, trading will be halted as a precaution. Now, people, I have a sense that something will happen, and I have an idea. It is possible that XRP will go on a rampage and spike more than 10% in a short amount of time. Please remember that the price of XRP nearly doubled about 2 years ago. In 4 hours, it had essentially doubled in effectiveness. Therefore, they may be doing some posy right here with the intention of, say, 10% in an hour. Attorney Deaton responded to this by writing the following: "Let's have an XRP versus Coinbase recap." He shared the Coinbase break in the news the other day. The Coinbase team went to the SEC in January 2019 to report that they had examined XRP using their digital asset framework and concluded that it was not a security. Some of America's most seasoned securities attorneys were on the Coinbase team to ensure that its own research of XRP aligned with the SEC's analysis. Coinbase, as a responsible corporate citizen, went to the SEC. Before listing XRP on its platform, Coinbase sought to confirm that the SEC agreed with Coinbase. The SEC enforcement attorneys were well versed with XRP and its connection to Ripple prior to Coinbase's January 2019 meeting with the SEC. First, the SEC was informed of the terms of the 2015 settlement between XRP and FinCEN by FinCEN. Actually, audits of every XRP sale from 2015 to 2020 were given to the two agencies. More importantly, on June 13, 2018, SEC enforcement attorneys wrote an XRP Howey analysis letter. Indeed, Hinman's June 14, 2018 ETH lecture was no longer a security speech. Since the attorneys who drafted the XRP memo did not suggest enforcement or a cease and desist to stop selling XRP to Chris Larsen, Brad Garlinghouse, or Ripple, it is evident that the SEC enforcement lawyers in 2018 did not conclude that XRP was a security, just like the seasoned security attorneys at Coinbase. During the January 2019 meeting, Coinbase told the SEC that it will put XRP for sale on the Coinbase platform unless the SEC disagreed with its findings. The SEC did not oppose Coinbase listing XRP, nor did they discourage it. On February 26, 2019, a month later, XRP went live on Coinbase. Coinbase actively promoted the use of XRP and USDC for internal money transfers for a fee as soon as they were listed. Look below. I'll just make this full screen for a moment, so if you want to watch it, you may pause. However, Coinbase was really promoting XRP at the time, as seen on this screen. Then he says, after 7.5 years of being listed on the US stock exchange, the SEC abruptly declared XRP to be a security and filed a lawsuit against Ripple and its two executives on December 22, 2020, just under 2 years later. The SEC, however, took it a step further. It made the immoral argument that all XRP were securities in bad faith, regardless of how it was obtained or if Ripple or its executives sold it. 75,000 XRP holders entered the action as amici, and Judge Torres agreed with Ripple, Coinbase, and the 75,000 holders, ruling that XRP is not a security based on thousands of XRP holder affidavits. XRP was relisted by Coinbase and other companies within hours of that decision. Coinbase also made this announcement today. Consider the enormous loss of time, money, and resources. But we prevailed. For that one, I'll receive a small round of applause. Attorney Dean, you're right, and it's crazy. I think about this quite a bit. How we got here. XRP was purposefully suppressed, which hurt our bottom line. Who knows? If not for this, the price of XRP would be higher now than it is. However, it did offer some consumers the chance to purchase more at a lower cost. However, there are moments when I ponder this and think, my God, all this money wasted, hundreds of millions of dollars, all the stress, all these years, and there's a $50 million fine in the end for Ripple. Of course, there was no fraud, and there were no real victims. Consider that, even the SEC admits that there were no real victims, which is incidentally why the $50 million fine, which usually would have gone to victims if there had been any, is instead going to the US Treasury. Yes, exactly. Because there are no victims, it is expressly going to the Treasury. Do you feel safe in the outdoors? We are grateful that we were able to switch the administration because otherwise, we would be having a completely different discussion at this very moment. But that's the end of it. Not having to worry about this nonsense anymore is really pleasant. Then we got this. Some cryptocurrency stablecoins aren't securities, according to US SEC employees. According to the regulator staff's most recent statement, which was detailed in the areas of the cryptocurrency industry for which it has no legal interest, the US Securities and Exchange Commission has no business with some stablecoins or their issuers. I simply adore reading that. Once more, stablecoins are here to stay. Therefore, that is fantastic news for all XRP holders. And it's fantastic that Ripple is entering the cryptocurrency space at this early stage because in 10 or 20 years, good luck developing a new stablecoin and entering a well-established ecosystem. Ripple may now though. Although it's not as if anyone could just go out and do this and acquire traction, Ripple has a huge financial war chest, so they can. And for XRP holders, this is fantastic. I see it as just one more step to assist in guaranteeing XRP's long-term sustainability. Eleanor Tarrant, a former journalist at Fox Business, had this opinion. This, in my opinion, was a fairly accurate summary. The SEC Division of Corporation Finance recently released guidelines on stablecoins, she wrote. The agency created a new term, covered stablecoins, to refer to stablecoins that are backed by assets held in reserve that are deemed low risk and easily liquid, with a USD value that equals or surpasses the redemption value of the stablecoins in circulation, and that maintain a stable value in relation to the US dollar on a one-for-one basis, i.e., one stablecoin to one USD. According to the division, the SEC does not have authority over covered stablecoins since they are not offered or sold as investment contracts. Why couldn't they have mentioned that years ago, people? We understand why, because their only goal was to ruin the entire asset class and our chance to get wealthy and change our lives. That's what the previous administration was doing. In any case, she goes on to say that algorithmic stablecoins, yield-bearing stablecoins, and stablecoins that monitor the value of assets other than USD are not covered by the declaration. I will absolutely accept that. I do not provide financial advice. Nothing I write or say should influence you to buy or sell anything. That is a really, really awful idea.